Is this it? Is this the big one? No, I'm just kidding. What's going on? Tony Angelo's here, and it is September 30th, Friday, September 30th, the end of September, and my oh my, has this year just changed tremendously in the real estate industry. Just yesterday, rates passed 7%, which is kind of crazy considering a year ago people were getting rates like as low as 2%. So quite a big difference. And that has shocked the market quite a bit. Homes are taking a lot longer to sell. Buyers, every single day that they don't buy a home, they just get priced lower and lower because they just cannot qualify for the same amount of loan that once were. So it's definitely changed some things. And I'm seeing it too with my own clients who are struggling to find something that they find suitable that's also in their payment, because every day rates just seem to tick higher and higher, and they just get more and more expensive. So what does that mean in context? Well, let me tell you, assuming that you put 10% down and you bought a house worth $435,000, which was the median in the US last month, it would have cost you $1,000 more a month than it would have in August 2021. So 1 year, completely different payment. And last year, home prices were, the median price at least, was 15% lower. So you're paying 15% more and you are paying $1,000 more. It's crazy. So it's definitely changed a lot of perspective for a lot of people. And quite frankly, no one's got a crystal ball, myself included. It's hard to tell how high the rates are going to go. If you look at a chart, it just kind of goes like that, parabolic almost. You almost want to say this has to come down. And if it comes down, it puts buying power back into people's pockets. So it's almost a question of are prices going to drop, or do people just sit on the sidelines and wait for rates to drop? Because it's a roller coaster right now, and it's real unclear what to do, and not a lot of people have that clarity. So at the end of the day, if you're thinking about buying or selling, you just have to ask the question of, is now the right time for me? Do I need to move? Do I want to move? Is my current housing situation not suitable for me anymore? These are the questions that you have to ask all the time though, because timing the real estate market never works. Timing the stock market never works. Timing anything doesn't work. So if you do have to move. But yeah, that was a little bit of a ramble. I gotta get back on topic. So why are interest rates just spiking so wildly out of control? A lot of people think it's because the Fed is trying to fight inflation. They have aggressively raised their benchmark rate, which is the rate at which banks lend to one another, and that gets passed on to the housing market and all other things too. Anytime you're trying to take out debt, it all stems from the federal funds rate, which has been raised quite a bit. On the flip side, while it's become so much more expensive to borrow, there's just not a lot of homes for sale, and people still do need to move. So there's the one thought that says okay, well, people who bought in the last couple of years, several years really, are going to have somewhere around somewhere between a 2 to 4% rate, and they're never going to trade that now for 7.5 rate. There's that thought process, but the other frame of mind is, if you have to move, you have to move. If you are having children and your family's growing and you live in a one-bedroom condo, you still have to move. So while financial situations does play a role in it, the majority of people who are moving or moving to a larger home or even a smaller home are doing so because their life condition has changed and they need to accommodate that. So it's this tricky balance that people are juggling with. Do I move? Do I wait? Do I suffer for a little bit longer? Or do I just get on with my life and deal with the rate that it is right now, knowing that when it falls, if it falls, you can refinance? That's a tricky decision, and as a realtor, I try and help guide people through asking them questions that can help uncover some of those answers, but it's a case-by-case situation, really. At the end of the day, prices are declining, which is what a lot of people wanted to happen, but the affordability factor of it has vanished. Rates have gone up so much, and it's put people between a rock and a hard place. It's put sellers between a rock and a hard place because they now struggle to find somewhere to go, even more than before, which was also hard. And buyers are also between a rock and a hard place because not a lot of homes. It's very expensive to borrow at the current moment. And also the rental market is extremely hard and very hot because the people that are getting priced out of the purchasing market are moving to the rental market. It's a tough situation, and a lot of people feel trapped. So this is going to be a developing thing, and we'll see how it develops over the coming months. A lot of people think that the current rates are pricing in, so to speak, a max point of where the Fed funds rate is expected to be come first or second quarter of next year. But all that to say, I think that over the next 12 months, if whether you're looking for an investment, a real estate investment, or a rental, or potentially even a flip, really, there are going to be more opportunities now and in the coming months, even more so, I think, than we have seen in a long time. In a long time. It is my belief that 2023 will be this decade's equivalent to 2011, 2012, which you could have thrown a rock and you would have found a good deal. So we'll see. Stay tuned. But hope you enjoyed this video. Talk to you soon.